Afternoon, good evening, good morning, wherever you are. Today we're doing a quick market review / Q&A / backtesting. So if you weren't in the previous stream earlier today, we'll cover that. And then if you have any questions, if you're new here, just post them in the chat and we'll cover those as the stream progresses. This build will be recorded and posted on YouTube after the fact. So if you have to leave or if you miss something, it'll be posted so you can go back and watch it if you want to. So looking at today's price action, potential entries, things like that, bias. If you have not watched the stream recording from today, that's also posted into YouTube videos. But today, looking at the 4 hour, let's go to the daily actually. Start of the daily. We had this daily imbalance that we were trading into yesterday, and price action closed at the discount end. We're also holding this inversion fair value gap. You can start to see this market maker sell model starting to build. But there wasn't anything clear on the daily chart, at least for me. I could argue that we're going to displace through that daily imbalance. The 4 hour and the hourly is what I normally like to use for bias. Now going into today, I'll send a screenshot of what I sent into the private group, but I had some difficulty finding a clear bias today. If we go back into replay mode, basically before 9:30 even prints, this is basically where we were at. We were trading into the higher time frame sibi and premium. We also we were respecting bullish PD arrays going into the session. So I was looking for a bullish move originally, and I was looking for that kind of to frame that on the market profiles and things like that. And I'll indicate what led to me flipping my bias. But since we already know what happened today, we'll just kind of summarize the actual price action and how you could find a bias today. So if you go to the hourly chart, most of my bias work is done on here, but we have we had no really clear SMT at the high of the week. So there was no clear indication as to why that would be the weekly high, nor a CISD, nor a market structure shift that would have indicated we wanted to move lower. I like to look for both SMT and some sort of confirmation of a reversal to showcase why we want to either put that in as the weekly or the daily high and then start to frame a bias off that. The only indication to me was the fact that we closed through this gap. So that's one violation of order flow. We were holding it with the candle bodies for the most part. And then we also ran out this swing high here, which I believe was Asian session high, if I'm not mistaken. Yeah, Asian session high was over here. But we ran into this gap, and we also, something to look for, but rarely happens, is PD array SMT. So we didn't have any SMT at these highs, didn't have any SMT at these highs, but inside this gap, we had SMT. So ES failed to reach up into their premium array. NASDAQ did, and you'll know that's going to be at a key time. So for framing a bearish bias, we've got this inversion gap. It's closed through being respected. We're starting to hold these sibis on the way down. You could frame a bearish bias. Then you're going to look for, did London manipulate? And you start to look for market profiles. So we go to the 50-minute chart. We look at the market profile. We don't see any clear swing high that London's manipulating into. We can see there's not really much. There's a bearish order block there, but we don't take out the swing high. Nor do we have meaningful displacement after that manipulation. So we open up at midnight. We start to trade up. During London, we have no displacement to the downside. So therefore, you shift that when the high of day is going to form into New York session, New York Open specifically. So we're trading up. We've got that PD array SMT I mentioned. And then since we had 10 a.m. news, our important key times for the day is going to be 9:30 and 10 a.m. So we look preferably between 7 to 10 to form that high of the day, but more specifically those key times on the 15-minute chart to find that high of day or the SMT or potential souping opportunity. So right here at 9:30, we tag that IRL with the SMT. You can start to look at lower time frames exactly of, let me turn off this paper trading really quick. You can see where the setup was. So if you go to the 5-minute, remove all of this really quickly. We've got this consolidation range below the higher time frame PD array. So that's another indication for souping opportunity. Preferably you want to have some sort of original consolidation, higher time frame PD array, and key time with SMT. That's going to be your best souping opportunities. But if you look at the 5, we've got this consolidation range, and then it sweeps it and closes back below within that 5-minute candle. So As we sweep it and we displace down, we've got a market structure shift below that swing low, or you could be using sysd, or you can be using inversion for value gaps, bunch of confirmation tools that point to this being the potential high of day. And then you can frame the setup after that. We've got this bearish order block on the 1 minute and also this gap. And looking into the 1 minute with 10 a.m. news, preferably, I mentioned this on stream, but I like to try and find setups after the news. The news driver most times can, especially 10 a.m. news, can mess up the macro. If you're going to find an entry during the macro time, it's got to be really, really earlier on into the session so you can get best chance of being in line with order flow and not having that 10 a.m. news stop you out. Other times when 10 a.m. manipulates, there's not much you can do besides waiting for that news to come out. So with 10 a.m. news, I favor to see that news come out first and then find an entry as a result of the price action that's delivered. And in this case, we've got 930 creating the high, and you can take your fib projection from the 5 minute, from this swing low to this swing high, start to find targets, and you go back to the 1 minute. The news comes out, and we have this inefficiency printing right in line with this PM session low. So we have a gap here during macro time, fills it, and then starts to displace towards that -2 to -2.5. Now, since we're trading into an internal range for value gap in the beginning, we're looking for now ERL, important time-based session liquidity. We've got these relative equal lows down here. Switch back over here. We've got these relative equal lows. So that'd be your first objective. Obviously, we ran that out prior to the entry. So what's more examples of time-based liquidity? Well, we have this London low from previous day. That'd be 1. You have the previous day low. So right here, that's another example of just right at midnight. You can see that's the previous candle, the Monday's low. And then you've got these relative equal lows with the PM session and Asian session from Friday and Sunday's opening price. So now you have these pools in line. If you go back to the 1 minute, you can see how they line up with time as well. So if we're finding an entry, if you want to see the high between 9:30 and 10, the low should be put in during the session, specifically for the session between 10:30 and 11. And you can see as we take out this sell side, we trace back up into a short-term premium into a 5 minute gap right in here. So we trade into the 5 minute gap, starts to displace away. You have an inversion for value gap that's traded through sysd. You could be using that as a secondary entry or re-entry. Displaces again, takes out that swing low, the PM session low from Friday, and then it places the session low here at 10:47. So you can see the time dynamics here of high of day being formed, entries being formed during the macro time, both before and after the news release, re-entries being given as we approach 10:30, and then the spooling that happens right at 10:30 as we run for that daily low, and also the key levels. So going from internal range for value gap to external range for value gap, or sorry, external range liquidity, IRL to ERL, with time and price both in mind. Now, in terms of bias for tomorrow, I don't really have a strong one for going into the day. We have 8:30 news. We also have FOMC minutes, both of which can have some decent manipulation added into it. So I'll wake up tomorrow. I'll look at it. If there's anything clear, then we'll have a stream for tier 2 guys. If not, then maybe post a market review, something like that. But you can also see we continue it into a new time of day, into PM session, silver bullet. So you could study this, and if you saw that demo I took earlier, this was a continuation trade framed off of that gap that I mentioned. So got this 5 minute gap. It retraces back into it. I was expecting a new low post noon for noon to run out the stops and potentially retrace back up into these inefficiencies up here. So entry basically just within the 5 minute gap and then targeting that new low post 10. And that's covered within the PDF. Look at the DOT chapter for New York open reversal profiles. But yeah, nothing crazy today. I think it's something to look for and something to study. We also, I don't know if we didn't tag -4, but looking at the key times, looking at today was more of a difficult bias just because there's so many things that don't usually happen, right? PD array SMT, no clear reversal signature in the market on the hourly chart. And this is kind of what January price action will give you, is this kind of funky PA where it's almost perfect, but there's a lot of tiny minute details that make the bias or intraday tape reading harder than it should be. We're probably going to get this kind of PA all the way up until the second week of February. So the rest of January, you can kind of see this more difficult price action. And then once we get into spring, later into the winter, that kind of segues us into better PA. I do see the relative equal lows down here in the term of original consolidation. So potentially that would be the draw for tomorrow. And potentially this is the weekly high. But since we had no higher time frame SMT up here, that's what makes me doubt the fact that this could be the weekly high. Also NFP protocol this week. So keep that in mind. Thursday, there's no trading. So the rest of the week for me, I'm going to try and stay hands off. Friday is really the only day post NFP that I'm looking for potential continuation setups. If that doesn't happen, then I'm going to just sit on my hands because tomorrow, not looking for anything high quality. Thursday will be closed. Friday, you know the rest of the drill. So I'm going to be posting the entry, I guess the part 3 of the time guide video. It'll be based around entries for specific profiles and how you can use stages of price delivery for that. And then they'll have a PDF sale as well for the new year if you want to check that out. But this will be recorded and posted after the fact. But I don't know if I missed any questions. I don't think I did. Let me double check. Yeah, no questions. If you got any questions, you can post them. But if I missed them, or if you have any, just feel free to DM me or post it up in the YouTube comments for this video. But you can kind of zoom out. We got the breaker here, but got to see how we react off of the daily order block and such. Oh yeah, I don't really have any clear bias going into tomorrow. But really, really high quality day to study. Like perfect. You can also measure time of expansion, things like that. When you say 830 manipulation and expect 930 to expand, can that be a 930? Can that 830 be a manipulation leg? Most times it's news. I don't. It can be manipulation beforehand. Like sometimes if say 7 o'clock puts in that high, 930 could expand off of that. So you're still looking for the same signatures, which would be SMT, confirmation of reversal either through a SISD or market structure shift, something like that. Then you could still expect 930 to expand in that case. Yes. But a lot of times what you see is if 830 manipulated, it's very, very obvious because it's going to be that 15-minute candle right at 830 being manipulation and then 930 expanding. But that's a good question because typically that 930 will always serve as a function of either manipulation or expansion. But you're right. If it's not strictly news, it could be any New York Open reversal profile or classic London protraction profile where you see that manipulation into a higher time frame PD rate at the key time. So then 930 should expand. Why is the market closed on Thursday? I don't really know. Apparently it's because Jimmy Carter died. So it's like a day of respect. But it's kind of weird that would completely just close the markets on that day just because of that. But it is what it is. For a bias in the hourly, if we don't see a 2022 model, how else can we frame a bias? Strictly by using, there's actually multiple different ways you can, but 2022 is the easiest way. But the reason 2022 is a good way to build bias is because it has built-in narrative, right? It has liquidity sweep. It has market structure. It has PD raise. It has targets. All of that premium and discount is all contained within the 2022. So although you may not be able to see a 2022, you want to break the 2022 model into its pieces. And those are the tools you use to find a bias, if that makes sense. So for this example, okay, we're in discount. We just had a 2022 model. We ran out. Is there a higher time frame PD rate we trade into? We tag the the fair value gap here. We also tag the bullish breaker. And you can start to piece things together. It's all about combining tools. Bias is just combining tools and weighing both sides. So you should always weigh both the bullish and the bearish. And if you have more evidence and more data that points to one side over the other, that would be your bias. If you have data that points to both sides and they're even and you can't distinguish which way it's going to go, that would be low probability. But break the 2022 model into its pieces and you want to frame what's the most recent liquidity sweep, what's the most recent, or what's the current market structure that's being showed. How does that pair up with the institutional order flow, with order blocks and fair value gaps and things like that? Is there SysD? Is there news profile that you're expecting to play out, or a weekly profile that's expecting to play out on that day or on that week? But yeah, I'm always, as soon as I get to the charts, I have no bias most times. I'm framing both sides evenly, and then one will kind of show over the other, and then I'm cycling time frames. You shouldn't just use one time frame. It should be at least two. I would say 3 is probably a good number. I'll use most times for the daily or for the session bias, 4-hour, hourly, 15 is what I tend to move to. I can use the daily, I can use the weekly, but most times if I'm trying to capture the session, I don't really care for that day where the entire week is going to expand to, although it does play into it. It does play into weekly profiles and finding bias and things like that. But when you get really good at it, just by looking at the economic calendar and just by figuring out where the week is likely to expand, a lot of times by Monday or by Sunday, you can have an entire weekly game plan going into the week. And you can predict what days you're going to find setups on, what days we're going to find the higher low of the week form on. And it's really, really powerful because then you know going into the week what days you're going to show up to look for high quality setups and what days you're going to skip on. Because knowing when not to is more important than knowing when to. So collecting the data repeatedly, showing up when you need to, and doing the work that's required will help you realize what days you want to avoid and what kind of buy. And then you'll build the skill as well of, before you even go into the day, just by looking at the bias, trying to find a bias, okay, this is not something I want to participate in. You may know where it's going. You may know the kind of price action that's going to come out as a result, but there's just days that you don't need to participate in. Like for me, swing to Z, for the most part, I know how to trade them, but they're just subpar and they don't provide high quality range moves that I like to look for. I can scalp, 40, 60 points here and there from the 1050 macro on those days, but it's just something I'm not required or need out of the markets. I'm looking for 1 to 2 high quality setups per week, and that's it. And that's the entire thing. That if you can try to move towards that goal, it makes it much easier mentally to take trades and find trades and also skip out on days, and also makes you more vigilant in skipping days that are extremely low probability, either going into the session or as the session prints, you can see, okay, this PD area is not being respected. This kind of looks more funky than it should. Like even if you look at the 1 minute today, this kind of deep retracement going into macro here, if we were bearish, we should have been respecting some of these PD rays. We have these gaps in here. We've got this bearish breaker. At this point, this candle, if it's printing, I want to see it displace away. I want to see it close through that gap, this bisi, through this bisi, and start to attack the London low. The fact that we have to come up again, all the way up into premium, I can't even point to a specific PD ray we're tapping into other than this bearish order block. But that's so far into premium, this is what January PA will do sometimes. Like preferably best case scenario, you see just this gap filled, it trades up into it, and then it trades back lower, right? Slightly into premium, that dealing range, tags it, and then starts to move lower. But we don't get that. And this kind of price action for me will make me either confirm my bias if I was long, or it's going to be really difficult to sit through and be like, okay, my bias, if it was bearish, is correct. But this kind of price action, you've got SysD, you've got, market structure on the 5 minute, potentially holding. All of that points to more difficult price action than it needs to be. And you can skip out on these days knowing that there's going to be something better later on. Even yesterday wasn't terrible. It's just the expansion. You can see the manipulation happened before 9:30. And this is actually a good example of it. Unremorseful if you see, but you can see the manipulation here happening at 9:15. And then therefore 9:30 is expanding away because you had SMT there, tapping into that hourly PD array, the hourly bisi, and then we expand at 9:30. So in this case, we don't have 8:30 news, but you can see visually if this was 8:30, it looks very similar to it. And then, like I said, the price action here is not, it's not the best, but it's not terrible. Got this gap tagged multiple times and it does displace, but look at how many wicks there are. Look how slow it's taking. It's kind of just mellowing out this top. Now there's a lot of buy set up here. But anyways, we'll have to see going into Friday. So, yeah. That basically wraps it up. 20 minutes. Don't want to make it too long, but just a quick little market review. If you're in the PDF chat as well. Yeah, check the PDF gems chat. Make sure you read up on that. And then I posted the psychology thing into Trading Hall about the pace at which people are learning. Can we do FX replay back to such this weekend? Probably. It would be later in the day. Between Thursday and between Thursday and Saturday, I won't be home. So I'll be off my laptop. So if we have a stream on Friday, I'll be off my laptop. So I'd favor if I'm back home by the time we do an FX replay session, just because my PC runs a little bit better. So we can either do it on Sunday or Monday. One of those 2 days. We'll just get a couple days in, look at bias, look at basically the full top down of FX replay. But yeah, for sure, we can do one. And then I'll have that what's it called? Entries for the part 3 of the time guide video. That should be out by Thursday. This was the reason I sold here, but it was a risk entry. Sellers from the buy side. Oh, I see. Yeah, that's just such a weird entry, right? Like the 5 minute, was it the 5 minute wick? The 1 minute wick. Very, very difficult. I think this is the best entry you can get. But then you have to place a stop probably above the 10 a.m. news. Yeah, part 3 should be pretty good. It'll cover basically what entries to use for each profile and then how the stages of price delivery contribute into each stage, if that makes sense. But anyways, I'll post the stream recording later today as soon as it's done rendering. So be on the lookout for that. I'll post it into YouTube vids. It'll probably be unlisted. But take care of the rest of your day, rest of your night, wherever you are. And I will catch tier 2 potentially tomorrow for a stream. Otherwise, I'll see you guys on the weekend for another recap or stream. So take care and peace.